Hello, all of you. Today we are going to start our first chapter in accountancy. And your chapter first is meaning and objectives of accounting. So we learn what is accounting and what are the various functions of accounting and what are the various objectives of accounting. And I hope so that all of you are well versed with the various terms of accounting because these terms will be using, and if you are well versed with these terms, it will be very easier for you to understand the concept of accounting. So meaning of accounting, so accounting, it is an art of recording, classifying, summarizing transactions of monetary nature and interpreting the result thereof. So these are the functions that are performed in accounting. So what are the functions? Recording, classifying, summarizing the transactions and then interpreting the result thereof. So we will see one by one what is the meaning of this. So we are knowing that in a particular business there are n number or numerous transactions are there, and it is very difficult for a business or a human being to memorize all the transactions. So that's why we should record these transactions as and when they occur in the books, so that whenever we want to get some information, this record can be checked and we'll be able to know the information. So recording simply means recording of transactions in a set of books according to some rules in a chronological order. Chronological order means according to date. The transactions which will occur first, they will be recorded first in the books. And this process is known as generalizing or preparation of journal. So in recording, what we are doing, we are recording all the transactions in a set of books, that is known as journal. Now next is classifying. So when you are preparing or recording the transaction, they are not recorded in a systematic way. Systematic way means we are not able, by this time we are not able to know what is the total amount of sales, what is the total amount of purchase, what is the total amount of expenses, what is the total amount of revenue, because all the transactions we have written in a chronological order. First sales, then purchase, maybe then again two sales, then again few transactions of income, then again four transactions of expenses, then again two transactions of sales, then again four transactions of purchases. So in this way we are recording, but right now we are not able to know what is the total amount of sales, total amount of purchases. So in the next part we classify. Classify, just you think it is a part of sorting. Sorting means we will record the transactions which are of similar nature again in a separate book, what we call as a ledger. So all the sales from the recording part, we will transfer transactions of similar nature. So all the sales will be recorded separately in a book, all the purchase separately in a book, all the income in a separate book, all the expenses according to the nature of books, nature of account, they will be recorded separately in their respective books, so that we'll be able to know what is the total amount of sales, what is the total amount of purchase, what is the total amount of rent received, what is the total amount of commission paid, what is the total amount of interest paid, what is the total amount of wages paid, so that we'll be able to know exactly the figure of the transactions in totality. So that is classifying. Now after classifying, next part is summarizing. So in business, what is summarizing? What is a summary of a business? The summary of a business is to know the status of profitability and the financial position. Financial position refers to position of assets and liabilities. So from classifying, we prepare trial balance, we prepare profit and loss account to know the profit or loss of the business, and balance sheet to know about the status of capital and other liabilities. Then next part is the interpretation. So when we summarized, we are able to know about the position of profit, the position of assets and liabilities. So interpretation part, we make the analysis of the data to make the data more meaningful, and from this data meaningful judgment of the position of the business can be known by the users of accounting information. So that is the meaning of accounting. So what we are doing in accounting, it is an art of recording, classifying. So recording, what we are doing, we are recording the n number of transactions in a set of books, that is known as journal. Then we classify. So when you record all the transactions are written in one place, just like when you go to the when you're going to a school and maybe you're having only one copy. So what we are doing, used to record the notes of all the subjects in the rough copy, maybe English, then accounts, then business studies, then IP or P. So in a rough copy you are having all the information. But thing is that if you write all the things in the rough copy, it will be very difficult to retrieve the information when you require, because although it is there in your rough copy, but in a systematic way it is not there. It is there but in a haphazard way. So what it is to do, when you go to the home, again from the rough copy you transfer the information to the fair copy of the respective subjects. You will take the notes of English to the English notebook, you will take the notes of economics to the economics notebook, you will take the notes of business studies to the business studies notebook, so that whenever in the future you require some information, you don't refer your rough copy, you will refer your fair copy. Same here, when you record transaction, numerous transactions are just like your rough copy, where all the transactions in a single book you are writing. But in case of classifying, what we are doing a fair one means again the transactions which are similar in nature. All the sales will again transfer to a sales book or sales account, purchase to purchase book and purchase account, all the rent received in rent received account, all the interest received in interest received account. That means all the expenses and income in their respective accounts, so that we'll be able to know the total amount of income, expenses, sales, purchases. Then next is summarizing. Summarizing simply means to know the profitability and position statement of the business, because ultimately what is the purpose of business? To earn profit. So that's why at a particular point of time, every businessman, they want to know what is the profit earned by the business. So for that purpose, they prepare a profit and loss account, balance sheet, that is known as summarizing. And we used to record. After recording, classifying and summarizing, the results are interpreted. We analyze how much profit business has earned, the profit earned is sufficient or not. If the profit is less, what are the reasons that the business has earned less profit, how it can be improved, that is known as interpreting. And again, the term is, they are called transactions of monetary nature. So that means all the transactions which are monetary, which can be expressed in the terms of money, only those transactions can be recorded in the books of accounts. The next part will see the functions of accounting. So whatever we have read in the meaning, again they will be coming in the functions. So what are the functions? Functions starts with recording, classifying, summarizing, interpretation of results, and last one is communicating. So one by one we'll see all these things. So functions, first is a recording. So what is recording? So recording simply means it is an art of recording business transactions according to some specified rules. So all the transactions, they are recorded according to some rules. What will be debited, what will be credited, how you will debit, how you will credit. So some rules are there that in the next chapter we will take that one. So in a small business where the transactions are less, all the transactions are recorded in a book called journal. If the transactions are less, only one book is maintained, that is journal. But in case of a big business where number of transactions are quite large and numerous, apart from journal, we also maintain other books that is known as subsidiary books, what we call a subdivision of journal. Then next is classifying. So classifying is a process of grouping the transaction of one nature at one place in a separate account. So classifying, what we are doing, transactions which are similar in nature, they are again recorded in one place in their respective accounts, and this book is known as ledger, such as wages account, salaries account, sales account, purchases account, commission account. So for every transaction, so according to their nature, again they are transferred to their respective accounts. That is known as classifying, grouping of transaction according to their nature. Then after classifying, summarizing. So summarizing is an art of presenting the classified data in a manner which is understandable and useful to management and other users of such data. Now when you record, when you classify, so after recording and classifying, the accounting information should be presented in that way that even those who are not having the information of accounts, they can be easily able to understand what is happening in the company or business. So in summarizing, again this information, it is classified in a manner so that management and the other user here refers to maybe employees, maybe the government, maybe the investors, they will be able to know about what is happening in the company. Those who are the stakeholders, they must be able to understand what is the position of the company. So for that purpose, ledgers are balanced, trial preparation of trial balance, that afterward you will be knowing what are these things. Then preparation of profit and loss account to know what is the profit earned or loss incurred in the business. Preparation of balance sheet to know the position of capital, assets and liabilities in the business. So summarizing simply means presenting the classified data to make it understandable to the management and the users. And in summarizing, what we are doing, we are balancing the ledger, we are preparing this statement, that is trial balance, then profit and loss account and balance sheet. And the function of recording, classifying, summarizing, it is known as accounting cycle. This cycle is known as accounting cycle. We record, we classify, we summarize, then again we record, classify and summarize. So this cycle is known as accounting cycle. Business transactions are there, they are recorded in the journal, then ledger is written there, so again they are classified in ledger, and they are summarized by preparing trial balance and final account. And again business transactions will occur and this cycle will go on, and this cycle is known as accounting cycle. Then after summarizing, next is the interpretation of results. So what is the meaning of interpretation? So interpretation simply means the financial data, they are analyzed and interpreted in a manner that the end user can make meaningful judgment. So prior to this, now we are having profit and loss account and balance sheets. Now that profit and loss account is balance sheet and interpreted. So we analyze how much profit our company has earned, profit is sufficient or not. If not sufficient, what are the causes that the business is not able to earn sufficient profit? Where are the loopholes are there? What are the strength of organization? What is the weakness of the organization? All these things are analyzed so that those who are the end user again he refers to who will be using the information at the end. So it is management, it is employee, it is government authorities. The management, they will see that according to the amount invested, sufficient profit has been earned or not. Employees, they will see that according to the profit, proper salary, bonus, allowances are given by the company or not. Government will see that whether according to profit, tax has been paid by the company or not. Investors, they will see that according to the profit, they are getting the dividend or not, or whether the investment is safe in the company or not, whether there is a chance that the company will grow and expand in the future or not. So accordingly they will stay in the company, or they may sell their shares and they may divert to another company. So all these things are coming under the category of analysis and interpretation. Then next part is communicating. So in the prior part, the things are analyzed and interpreted. We analyze and then we interpret what has actually happened. And then these informations are communicated to the end user in the form of various reports. Just like when you go to a doctor and having some problem, what doctor do? They analyze and interpret. Okay, if not feeling well, they will analyze your BP through your by checking your blood pressure, through pulse rate, through your blood test, urine test, and then whatever results or interpretation they get, it is communicated to you. Okay, this has increased or this has declined, this is normal, and then that is given to you. The same way here, the profit and loss account, it is prepared, balance sheet it is prepared, then they're analyzed and interpretation is made. How profit is increasing, how much profit will increase in the near future, and then a report is prepared, what we call as an annual report or financial report, and then these reports are given to the end user. So here, who are the end user? Maybe the various users of accounting information. So who are the users? The users are government, management, employees, income tax authorities, investors, prospective investors, researchers, all are the users of accounting information. So these are the functions of accounting. Thank you.